All right. I'm on. All right. How are you guys? It's Saturday, 3 p.m. Just like usual. I'm here. I did post a couple of uh, uh, notice on the social media to let people know that what I'm talking about this afternoon. And today, and we talk about profit because when people make money, and I often get my clients saying that, Ying, what do I do with the profit? Such a great problem to have, right? I would like people to all have that problems. Then we can figure out how to strategically use your profit, but not increase your tax burden and not decrease your cash flow. All right. So before we dive into that, I like to lead you to our website. This is our website. I know I'm coming into the appointment click here. So our website is communitycpa.com. And if you come to the appointment, you will see the partners at our firm and their name and what they're specialized. And if you click one of them, click me, then you can make appointment with me right here. So these are the time available on the internet. It's actually reflected my schedule. Sometimes you don't find times during that day, but then you can look for another time. And of course, it's a paid service. So you come on our website and you book our time and we resolve your question. This morning, I was talking to a client from Spain. And they have an international tax related issue because they are doing some business transactions here in the United States of America. And not knowing how United States of America handles these business transactions, and they found our firm and coming to ask for questions. And I think that 1 hour we spend is worth a lot because I literally can give you the steps, what you need to do to get to be in compliance and running your business properly. So with that said, I want to lead you to another resources that we have, which is a YouTube channel. We have this YouTube channel, Community CPA, for many years already. And if I really count years, it's probably 4 years. We have more than 1,000 videos in this channel, and you can research. If you look for the magnified glasses and you type what you want, for example, I was telling my client this morning that from Spain, just type in foreign, the word foreign, then everything related to foreign taxes and the things that IRS come up and the regulates, and it's all in there. We talk about that. The best thing is that if you like my talking, if you think that you understand me really well, it is not because I'm speaking English. I'm actually speaking Chinglish because that is the kind of English that is not confusing. It is plain language, but the knowledge-wise is definitely the top tier of tax knowledge. Anyone have to pay big bucks to get it. So we are here to level the playing field. And I want to put out these webinars, this knowledge out to you for free, not because I have nothing to do and I like to do that. Of course, I like to do that. But most importantly, I want to level the playing field. A lot of times, small business owners, they get into the business, they don't have money to go for big advisory service, then they ended up doing things wrong, even ruining their business. So don't let that happen to you before you get into your business, before you're trying to grow your business, before you want to sell your business. You come into here, get your resources, and then ask smart questions. That's really how I would recommend everybody to do. So now let's get into our webinar today. Today's webinar is kind of freestyle for me because it's a lot of information. There is no way someone can cover all of the aspect within this 1 hour. And investing my profit in business, that's a very broad question. But that is a very frequently asked question by our client. So with that in mind, and I want to talk to you about, as a business owner, as a small business owner, how my other clients are dealing with it. So give you the real stories, give you the real calculation, so you can kind of understand what you want to do when you have this kind of situation or profit, sitting on your bank account. So with that said, before we dive into the details, and I do want to introduce our firm to you. Of course, you know the website already, you know the YouTube channel. I want you to know that my name is Ying. I am the CEO and a managing partner for Community CPA. I started the firm back in 1998. So that gives you an idea how many years we are. We're about 27 years firm. And with that said, I also served on the National Taxpayer Advocacy Panel. This is a federally organized and committee that providing advice to IRS. So it is not something that you just want to join, you can join. It goes through the scrutiny, going through the background check, and going through all of what you do before you become a member. So I was serving on the panel for 3 years, which is the maximum years a person, a term they serve. In fact, it's not maximum. I know that they did invite me to go back, but I just had too many things, so I did 3 years service for that committee. And I also an author. This book you see right now on the screen, that is the appointment with Ying at 8 a.m. That is my first book, and I published that in 2019. And this first book is about starting a business. So in that book, I have stories about how my client or even myself started the business. Give you an idea if you want to start a business, what kind of situation you might come to, and which examples in the book maybe fit you. And in my first book, I kind of established a little bit of psychology in there, and I call our business owners like from the land of heart, land of head, and the land of hands, to classify the people's approach in life when they come to business. And I finished the second book, which is this one. I want to show you that I got it a week ago. So this is the sample one, just arrived in my hand. So I'm going to go through that, making sure it's okay. So it will be on internet very soon on Amazon. So that's our second book. It's about growing the business while you started it and you arrived in the business land and you want to become. And how do you become? You go through this growing phase of your business. So we actually talk about how to grow a business. It's a very different approach to starting. There are people can only start but cannot grow. There are also people don't fit to start, but they can grow a business for you and with you. So with that said, it does require different body, I want to say body language, but it's so specific. It's actually a mindset. It's a body and the mind synchronizes to a business mode in order you to be successful. So doing business is really not as simple as you just, start up a company and you're there. No, you start up a company, you just arrived in the business land, and to become a citizen of that business land, it takes growing. So now, the last point we want to mention is no responsibility disclaimer. Yes, whatever we talk about online, because it's a free, and you do want to take precautions over the information that you get in general. And of course, if you're relying on certain sources, like I rely on irs.gov, and those information I got from irs.gov, and that I rely on. Sometimes even that was not a very good description or explanation of the rule. For example, ERC. It takes IRS a long time to come up with a better interpretation to the rule, which just happened on July 28th of this year. So you can imagine that when you getting knowledge from internet, getting knowledge from somebody, timestamp is so important, because it just depends. Some people we talked to last year and about commodity trading, about cryptocurrency trading, at that time, rules are even more unclear. But by this March of 2023, there's new rules come out, the new interpretation come out by IRS, so made that rule a little better, and maybe still vague, but it is better. So, with those kind of things in our real life scenarios, and then you want to make sure that you rely on it, but you take a critical view at it. If you really want to make a lifetime decision based on what Ying said on her webinar, I want you to come to me and to engage our firm, be an advisor to you. Then you can go forward with that. All right. So now I am going to kind of leave the slides because I want the slides, but I do want you to follow me in the remainder time of this webinar. So now let's look at profit, right? As a small business, a lot of times when I talk about profit, or when you tell me you have a profit, it doesn't mean the same thing. And some of the small business owners, they just look at the bank balance, go, that's my profit. So that's their equivalency of profit, the bank balance. And some more sophisticated business owners who are also not really familiar with cash flow statement and things like that, they may say that, well, for the last 12 months, my average bank deposit and my average bank balance is $50,000, so that is my profit. So, that is a better way to interpret profit than looking at today's bank balance, goes, that's my profit. No, that is not your profit, but yes, it is your money left over. It is the cash available to you and you can do things, but that doesn't mean it's your profit, right? So I want to kind of, fixate our understanding of profit. So what about your ERC funds? Is that your profit? You just got ERC check coming in, and man, that's quite a bit of money for me. And I have this money I don't even know how to spend. That is my profit. And you have said that correctly. ERC money is your profit. So what you need to do is you need to take, if the ERC is from 2020, you want to bring ERC back to 2020, book that as your income. And then you need to pay taxes right there. So as soon as we talk about profit, we literally saying to ourselves that it's a taxable income. Profit is taxable income, so you will pay taxes on it. So if your ERC check is for 2021, then you will bring that into 2021, pay tax on 2021. You may say that, oh, Ying, are you sure? Because someone told me that I don't need to pay taxes. I just need to reduce my payroll expense. And I used to have $200,000 total in payroll expense. Now I got $50,000 ERC. So I'm just going to reduce my payroll to $150,000. We're talking about the same thing, folks. When you reduce your expense, what is going to increase? Your profit, right? So ERC is taxable, period. And also, if some people tell you that, oh, let's make more deduction so we don't have to pay taxes, very dangerous. And when you make ERC amendment, ERC related amendment to your tax return, that's a very straightforward process. You pay taxes and you are done. And you do not want to combine all the other adjustments you want to make and coming to IRS goes, you owe me more money, or I don't owe you, even though I got $50,000 ERC money and I had more expenses that I didn't put in. So now I am putting that in, so you're going to be okay. No, it's not okay. IRS will launch an investigation and audit on you because your ERC related claim is getting way complicated. Okay, so ERC is taxable. And of course, there are times and you are saying that, oh, I made a lot of profit because I just did a big deal. I did a deal and it paid me $100,000. My real expense, just a couple miles driving, and that's about it, Ying. I made money. And when you talk like that, you are not putting in profit in a 12 months frame. When we talk about profit, we are equivalent that word to taxable income. You only calculate taxable income for a 12 consecutive months, right? It's a year. Whether it's January to December or is November to October, it's 12 months. So yeah, maybe you made $100,000, you drive a couple of miles, but the next 6 months, you've been putting out money and doing all kind of things to make your business better. So your 100,000 maybe went down to what? 10,000. Then your profit is 10,000, not 100,000, right? So don't use your A deal to measure your profit, because your profit is about a 12 consecutive month and what is your result is. For that reason, there's a lot of things can come into play, and when you really plan your finance, when you're running a business, there's no reason why you don't plan. When you plan your finance for a 12-month time, and you know when you make money, maybe the money gonna come in at the very end of the 12th month, then there's strategy you can do. Maybe you deposit that check in January if you end on December, right? So you receive check on December 30th. And if you deposit that in January, if you are a cash method accounting, listen to me, and your income is not income for the year that is going to end. So you actually don't need to pay tax immediately, right? You wait till next year to pay taxes. So with that said, there's things that you can do when you plan what you want to do, what you want to spend your money for. And what if your grandma just loves you and she gives you money and to support your business? Is grandma's money taxable? Is that your profit? Of course not. Grandma's money is either it's a loan from grandma, so you're gonna pay her later, or grandma might give you a gift up to 15,000 a year, then you can take that in as your personal money, so you can book that as your equity. That's not your income. Grandma didn't pay you for buying your service, right? So just be really mindful about where the money is coming from. What if you borrow the money from the bank deposit 10,000 for you in your bank account? Is that your profit? Of course not. That is the money you have to pay back to the bank. So it's your liability. Liability shows up like income. Am I right? Because they all show up to your bank like a deposit. But you have to be the one safeguarding those deposits, knows that which one is business deposit, which one is liability, and so you don't end up paying taxes on the money that you didn't earn. Those are the money you need to pay back. What about the customer who pays you a deposit, but the service is later? That deposit is not your income. That's your liability because you haven't even paid. You haven't even worked on it. So be really mindful about what is your profit. So that is not your profit. And the down payment from your client is not your profit. Your rental deposit from your tenant, that's not your deposit. That's not your profit. So just be really mindful about that. And what about your tax refund? Someone was so happy. They're getting such a big tax refund. They're like, I finally made money. I finally made profit. No, that's not a profit. Tax refund may be taxable, maybe not. Just depends where that refund is coming from. If it is coming from your personal tax return, if it is your personal tax return, you ended up with a refund, that is under your personal name, and that is something that you keep for yourself. You should not be paying taxes for that money under your business, even though it is coming from your business to your 1040. But of course, whether this refund is taxable or not depends on your state. Some state charges you, some not. And if you do standardized deduction, you don't have to pay taxes for your refund if you made a standard deduction. If you don't do standard deduction, you do itemized, then it's taxable. So there's rules related to that. So tax refund, if you ask me, the answer is yes or no, depends. Depends where you are, how you are doing it. So that is not your profit. And it is a tax refund. It's just not your profit. So now we clear our thought about the profit, right? So we're talking about the money that you have left over from your operating surplus that you want to figure out a way to use it so you can get away from paying taxes. Otherwise, that profit will be taxable. So now I want to lead our thought from understanding the profit now. So let's talk about tax saving investment. There is not a lot of item in the tax saving investment today I will give you, and I have total of 2, 4, 6, 8, just 8 items. 8 items. Okay, let's talk about each one of them. You can literally make a note, and I also, of course, we can post our PowerPoint. Actually, I was thinking that, in the past we used to do PowerPoint as the main screen, then, presenter, people like me are on the corner, but we can reverse that order to make those PowerPoint a small screen and us as bigger, so we're talking. Even though you are out there on the wire, on internet, and we really cannot shake our hands and, be interacting, but, to me, I am talking to you one-on-one, right? So now we have profit. Then what do small business owners do for their profit? And every single one of these items I have listed, 8 of them, is coming from our clients. And we have over 10,000 clients in Community CPA. And the majority of our clients are business owners. And like in some of the webinar, I let people know that, every CPA firm, if you ask the CPA firm owner or their partner, what is their sweet spot and what is their specialty, and they will tell you. If people ask us what's our specialty and what's our sweet spot, I'll tell you that a majority of business owners have sales more than $1 million. And our largest business owners who does accounting with us here and have sales over 200 million. And we also, of course, has a small ones. We have those baby ones who are just started forming, but we take that responsibility to guide them, grow them, so they can become the $200 million company one day. So with that said, these are our client stories. So the first one, when you have profit, you want to think whether you can invest in asset. When we say the asset, we're not talking about, just anything that can last for more than a year. Of course, that's a definition of asset, right? But we are talking about the asset can make changes to your operation. And a good example would be, we have a cleaning company, and they started with one gentleman cleaning one house, right? So he did a good job. So he started to taking on more houses. And when he started taking on more houses, and he knew that he can only do about 25 in the week. If it is anything more than 25, and his time start to jumble together, and he start to feel tired, so he doesn't have the focus on the cleaning like he used to. So what he started doing is that he started to invest in asset. You know what he invested in? He actually invested in these robot, those robot cleaning on his own. So a lot of his household owners that he clean the houses are pretty well doing. So of course these people can go to Best Buy to buy the boom robot, but this cleaner, and what he did is that he actually found the resources to get a discounted price. So he started to approach his clients saying that I will buy the asset and to have it cleaning your house. So next time when I come, it is kept cleaning for most of the areas. So when I come in, I can clean other areas. So in order to do that, I would charge you a fee, additional fee for cleaning, because the robot is mine and you can buy it if you like it after we use it. So he invested in asset. He invested in the robot, and so the robot cleans the floor, and next time he go, about 50% of his clients. So he had about 30. The 50% of his clients, 15 of them, bought the robot after a couple times usage. So with that said, he made money on resale, and he also invested in the assets. You see how he invested his profit. Otherwise, the profit he makes will sit on the book, and the tax people come around, and we make him pay taxes. And what else can we do? Because there is no expansion, no ideas, there's nothing in there, we can't deduct anything. We have already deducted all the supplies, he's driving mileage, and anything you can think of, we already thought of, and there's nothing to deduct. But with the robots, and he can deduct, and when he sell for more money, he make more money. So it has become a positive running of wise use of the asset, right? So that is a one way to invest your profit into asset that could help you be more efficient in your business. So if you ask community CPA, we do that all the time. Our computers, our printers, our scanners and systems we have in our office update so fast. We actually hardly have anything, a computer sitting on our desk for more than 3 years. They will be renewed already. So we can constantly investing in asset because we believe in efficiency. So if you get on the computer, for every single move you wait for a couple seconds, that is an inefficiency in workflow. So we actually care about that. If you want to grow your business, your first investment in your operation, if you have profit, is on asset. Figure it out. You know what that is. Could be as small as a headset that can make you talk to the customer better, and anything small, but it is impactful. So you want to remember that. Number 2, and invest in human capital. When we talk about human capitals, it sounds very impersonal. It sounds like kind of capitalist talking, right? So human capital simply are the bodies who help you to grow the business. And the human capital doesn't necessarily just your employee. They're your vendors and they're your customer. So you want to figure out how to invest in humans because they are literally your capital. They will make more money for you when you can invest that more. So related to that, most popular question we got is that, when do I know I'm going to hire a new employee? Such a $1 million question, right? I have a simple answer here for you. If you are a small business owner and you are thinking about hiring a new employee, I want you to look at what you have in your bank account and whether a certain balance has been there for a while. So let's say that's a $3,000. You always have about $3,000 in your bank balance, and it doesn't matter what your spending is, you seem to be able to hold on to that water. The $3,000, almost you can carve it out and you don't miss it. That $3,000 is your human capital resources. So you want to, number one, make sure that reoccurring payment can come in. So $3,000, if you pay someone $3,000 a month, it's like $36,000 a year total salary, right? So I don't want small business owner to think about annual salary because that number scares us. That number makes you cringe and you don't think you have it because your profit is only $5,000 and hire a person, I need $40,000. Are you kidding me? That's a lot. Don't think of that way. Break that dollar amount into hourly rate. Break that dollar amount into a salary. So $3,000 a month, if you don't miss $3,000 in a month, you have that profit. You use that for human capital. Maybe do a new hire. Hire someone can maybe replace 1/3 of what you do and creating 2/3 of a new job. And then you want to measure, do you have enough work out there if one person come in can actually fill up their time? And I'm not talking very inhumane and not care about human right. And in workplace, folks, small business owners, and listen up. If you want to be nice to your employee, it is not that you pay them a lot, have them do very little. That actually doesn't do any good. Maybe last for a month or 2 months, that's it. The thing is, whoever comes to work, they must accomplish something. If you want to hire someone, your ideal situation is that people don't work, but they got a lot of money from me. That's never gonna happen. That's almost like the communist theory in the 80s, 70s, and it just is an ideal thought, but it's against human nature. human nature always need fulfilling. Fulfilling sometimes is money. And when I got more money, that's fulfilling. But a lot of times, especially in the United States of America, poverty, no food, no money. Yes, there are people like that, but small business owners like you and me, and you are not there. You are above that. So your fulfilling feelings, it is not just money you need to accomplish. Same with your employee. They are with you. So if you are not that way, they are not that way, and you want to make sure they fulfill something, they have something to accomplish, then you have the compensation comes in, make them happy. That is a combination of happiness, not you just go on vacation, I pay you a lot. That happens to our children. Am I right? A lot of you have running a good business, but your children sucks because they don't work and they don't care. They think money fall out of the tree. And they look at you working so hard, they go, I don't want that life. You just keep on supplying to me. I know I'm not talking to one or two of you. I'm talking to a population. That is the problem we have today. So they have nothing to accomplish because you took away the accomplishment of money. That's the simplest accomplishment a human can have in this monetary world. And we took away that. We tell them that, oh, you got enough of that. Then the next thing, the kids are lost. They don't know what else they have, right? So that's why a lot of people, when they come from poverty, or you and me, we come from poverty. And in the very beginning of our life journey, we just want to have money. I had that journey. I just want 25 cents to make a phone call. So I don't have to walk on highway to go home because I don't know how to walk a local street. So with that, and we understand, you invest in human capital and not only give them a job, you need to make sure they have things to be proud of. If you can do that, you use your profit per human capital, hire new hire. And the way to hire is to look at your balance, look at the money you can take out without affecting your business, and hire that new person. And in the early time of Community CPA, I started the firm, so it was just myself. When I hired the first person, I actually don't have the money to hire, but I project the growth of the firm. So I would hire people in advance of what's really in my hand. So I did that. I cannot tell you that's right or wrong, but I'll tell you that's another example how people grow company, right? But today's webinar, we're talking about you already have the profit and you don't want to pay taxes on it. We teach you how to grow your company. So human capital is one way to invest. And it is very important. It is almost, the asset is number one, human capital is number two. All right, then invest in your customer via social media, via website, via Google ad, whatever you do. So this is the marketing presentation, right? So if you have profit, you want to invest in that. That is same, just like we invest in employees and we invest in our customer, and because customer is the capital for us. If they are getting to know us, they come through. Just like when we go to our trade conference, like the national taxpayer conference and the things like that. Our folks realize that a lot of people knows Community CPA because they know, and we invest our profit in market presentation. So we hire professionals to do our website. We invest in equipment. The equipment around me are money, right? So these are where the profit is, and we invest in the market presentation, so to get the customer to be with us. So I invest my time here to make sure you become our customer. And that is my goal. And I always make that in reality. We have a lot of clients from all over the country to our firm because of our webinar, because of our internet presentation. Of course, so this is number 3. So we talked about investing in asset, investing in human in your employee, invest in market presentation, which is your website, your Google ad, and whatever you do out there to bring your name above the ground so people can see. And you can also invest in welfare of your company. I put that as number 4 just because it doesn't deserve to be in number 1. The reason I say doesn't deserve, not because we don't want to do welfare, we don't want to provide good, because it doesn't last if it is your first goal. Your first is really the asset. Your second is your people. The third is your customer. Then we talk about the rest of it. So now we talk about your welfare inside of the company. So what are they? They are your PTOs, how much time you give to folks. They are your policies in terms of dress code. Do you want they all come in for tuxedos or it's just casual clothes? It's okay. So you want how you make the environment so comfortable so people feel cared, right? You may be investing in life insurance for your key employees, and you may be investing in retirement programs for your employee, pension plan, medical insurance, vision, dental, you name it. And the short-term, long-term liability, short-term, long-term disability. And those are all welfare. And you may say that, well, that is also expensive. How am I going to do that? That's where your profit goes. If you have profit, then that's what you do. And you will look into the welfare. And I will tell you, it's always important. Welfare inside of the company is always important. And not so much of, your folks, your employees will compare with other employees. It is more of creating that level of comfort. So when you really needed people, when you wanted them to get something done, they have the energy, the passion, the care, the love to do it for the company. It is always two-way street, right? You can't be slavering over a person than asking for good needs, a good action to come back to you. And that exists in the 20s, 30s, 40s when slavery is in place, but is not today's human society. Today's human society is much more wealthier than before. We are much more wealthier than before. Our country is one of the richest country on the planet. And with that said, our expectation is different. If you don't offer any of those benefits, it is not attractive. That's just reality. But you also, if you are a small business owner, you just started your business, I know it is difficult for you to come up with all of these benefits, but you also don't have a lot of employees at that time. You have a small group of people. And at that time, when you are just starting, you don't have a profit, you have a small group of people, all of them is driven by mission and value. All of them believe it's gonna make it, believe that this is fun and exciting and adventuresome, so they're all attracted by the excitement. So money, welfare is not a thing at that time. But once you really start running a business, eventually it's just gonna lay it out like any other business. If you don't compare yourself with other business, you don't have the best benefit in place for your people, and your people and can be taken away easily by the company that with a lot of benefit. So with that said, it is important to create a welfare inside of your business, right? And at Community CPA, we have all of these benefits I am talking about. And I don't think there's any more to do, but we do every single thing we talked about. And so with that said, and I'm just following the best practice because I learned from my client. And I know that $200 million company and what they do. And so I follow. See, this is one of the biggest benefits to be a CPA firm, to have a CPA firm as a career, because you really see life, not just business. You actually see the world within your clientele. So I always tell folks that, in fact, we really have the thermometer for the climate. We actually know. We actually know whether we're going down or we're going up. I don't care what the media says. This year, this 2023, the company who made a profit, they are real hero in business world. I'll tell you that. A lot of company couldn't make it. And, pandemic time they did, but now they couldn't. Why? Because the money the government give to them and it's spent out. And there's reasons for people couldn't really last the business. Or some of them probably don't even want to last because they felt like, that's good, I got all the money, I'm done, right? The business that is still running today and are making profit, you deserve to know all of these points I'm talking about. And of course, the number 5, it is number 5 because you have to satisfy your asset, you satisfy your human needs, you satisfy your market presentation, and build your welfare in your company. Then the next thing is expanding footprints. Use your profit to expand your footprint. Don't stay in one place, in one area. And the world is so big, and this country is so large, and you can go to different places to repeat what you do good in one place. The market is so big, there's no worry about competition. There's no competition. Everything is you. I was just, talking about a realization that I have while I'm writing the books, and I'm doing the 3rd book, which is expanding your business. The 3rd book is about, I wrote this growth of your business. Expanding is really the leap of faith, where you go on extra different ways to grow your business. Is expanding your footprint. And with that, I said that every business can be very successful. An ice cream shop can be very successful, and they can become a franchise. A sandwich shop can become franchise. Okay, a CPA firm can become a huge business. And so all of these, they're ordinary business. Every day there's people setting up tax shop. Okay, there's a lot of CPAs out there, a lot of practitioners out there, but only a few will rise above everybody, becoming a staple, becoming a milestone for this whole professional world. And the community CPA is one of those. So it takes management skills. It takes understanding of how to expand your footprint. So that literally is my 3rd book. It's 2 p.m. So I plan to finish writing that book this year and plan to publish in 2024. So that is another profit using place where is to expand your footprint, finding a new location. Then of course, number 6, when you get to these points, you already start looking at different venues and different locations and partnerships and all of these. Your next step in this whole thing, number 6, is to find the professional you can tie your relationship with long term. I encourage our business owners, don't switch your CPAs like you're switching your tax preparers at HR Block. That's not how it works. And you need to find the advisors that really works for you. That doesn't need to be me. It doesn't need to be community CPA. But what I am saying to you is you want to tie that relationship with your professional folks because you want to grow with them. That is so key. And this morning, I did a second thing this morning. Other than meeting the client from Spain, I actually went to an opening of a business. This business, the business owner, I have known him for 25 years. And when he started his first business, I wrote business plan. He got $1.2 million funding, and he began that business. Today, he's opening his 6th locations. So I went to that number 6 to look at his place. And that is where the connections, the longevity of working relationship is so rewarding. So I want to make sure that you find that right person. You find that right firm because that is where your profits should go. You want to invest in your professionals. Okay. Number 7, invest in research and development. You know how in every industry we have innovation, invention. Even for a CPA firm, I always tell my folks that, every day we are creating service items that we can service our client better. We can create our way of workflow so we can work smoothly together, right? So these are inventions. These are research inventions, development, and some industry. For example, we have a manufacturer. They are producing the biochemical reactor where you put in the waste on one end, it comes out as a fertilizer on the other end. Okay, with that invention, there's a lot of R&D. Your profits should go in there because that will give you tax credit. Okay, so that is where your credit should go on the number 7. The last one is invest in business workflow and formalization in internal business conduct. This is an investment, sound weird. And what I'm trying to say to you is use your profit, develop your internal organization. And if you don't know what I'm saying, I'll give you an example. And for a long time ago, when we are a small firm, there's 3 people, 2 people, and do you think we have a need for an annual meeting, get everybody together and showcase what we're doing, explain about our future, and do anything formal? Do we need to do that? The answer is no. Even if I have profit at that time, the profit would go to asset, profit would go to hiring people, profit would go to marketing, and the profit will beef up the welfare for the company. But I would not go down to my last step right here to say that to pamper or to grow a formality of your workflow. So in today's world, Community CPA has annual gala. We get together, we talk about the vision, we talk about mission, we talk about what was invented in the firm this last year, how we are doing as a firm, where we are going next time. So we have all of our people together with their family. We talk about the future. So these are investment. They don't come for free, and you do spending money on that, but those are necessary. And if you get down to this last step, and you are in the process of growing your small business into medium and a large business, if you arrived here, you are already on your way to take off. You are already in my 3rd book. And I do need my client to go into our 3rd book because I need to write about you. And I write all of the first 2 books I have, they are story-based. Of course, I don't tell the real client's name, and I mask it up so that people don't recognize who is who, but they are true stories. So I want to say that these kind of investment, this 8 investment I talked about, and this investment is all going to create tax saving for you. And some people might say that, well, I don't care about tax saving. It is really not important, and it's only a couple $1,000s I save if I do it or don't do it. So I want to give you a math effect in terms of a thought of, I don't care if I have profit, I just want to pocket to my own pocket and for my family, and I'm not worried about the business. I'm going to keep my business the same way, and I'm not growing it, and I'm just going to leave it that way. Do you know that in reality, there's no such a thing about keeping your business that way? There's no that way. It is either drop or going forward. Business is like a car on a slope. You keep on driving forward, you reach the peak. If you stop there, you start sliding back down. There is no flat place for you. Okay? And so in business, it's constant innovation. It's a constant motivation. It's a constant thinking and a sleepless night that you need to classify that as okay. And you need to enjoy those challenges in order to stay in business land and not to bury yourself, right? So with the thought of I have a profit and I'm going to invest what you said about these 8 points, Ying, but what if I don't? What if I just take the profit home, I have a profit, and let me give you an example. If you have a $10,000 profit, and if you operate a C corporation, and your federal tax is $2,100 a year, okay? 21%, very simple. Your profit is $10,000, there is a $2,100 tax. And you're like, I love to pay the tax. You know, I need to contribute to my country, and it's okay, Ying, I pay my tax. So we make you pay it, okay? But there is another person, also made 10,000 profit. So they came to me and before the year end, said to me that, Ying, I want to figure out a way to not pay taxes on the 10,000. So what should I do? So there's 8 items we just talked about, right? So if you don't remember the 8 items we talked about, let me quickly summarize that for you. It is the asset, number 1. It is the new hire, number 2. It is the market penetration, number 3. It's the welfare for your company, number 4. And it's your expansion footprint, number 5. It's your professional investment, like investing to community CPA, number 6. It is your research and development invention, number 7. The last, your business workflow and your internal infrastructure. So with that 8, if you did all of this 8, then you can write off your $10,000 profit, right? So you saved $2,100 tax. Now, 10 years later, what did you really save? You saved $63,000 cash. I'm not even talking about the impact you brought into your company by spending that in these 8 items. I'm just talking about in real cash, $2,100, you saved it 10 times over 10 years. That's actually $63,000 if I just use a very conservative interest rate of 3%. You know that right now you buy CD, you have 4.75%. I'm using a very conservative rate. You still have cash, $63,000. That's no brainer. Who doesn't want to save taxes and also grow their business? Every single one of you listen to me, agree with me that you want to be that one. Save taxes and grow business and actually gaining that $63,000 cash value. And this cash value actually gives you power to excel your business. To do that, you need to get into tax planning. And this tax planning, I tell people that tax planning increases your efficiency, tax efficiency. If you plan your taxes before December 31st of 2023, you will save it. And the tax planning is an acquired lifestyle. I know nobody born with this lifestyle. You know, someone said that in life is 2 things are guaranteed. You're gonna die, you pay taxes, right? So that's what people say. But we're gonna die, that is something we don't need to plan because God plans for that for us. But that tax is something you plan. That is acquired lifestyle. Healthy lifestyle produces quality life. I do not need to say that, you know it, right? Very simple. So a habit of doing tax planning every year would produce wealth and elevate your business and elevate you to another level. That is really a commitment. And in our firm, of course, we have clients who are religious about tax planning. During the tax planning time, which is from October to December, that is our firm busiest time. It's not tax season because we plan the entrepreneur's taxes at that time. Tax season come, we already know what to do. There's nothing to be too scared and busy. Okay? So during the tax planning season, we are busy because we have a lot of clients that are believing and having this acquired lifestyle. But I, of course, have a lot of clients also don't want to do tax planning. They're like, oh, I don't want to do it. Don't think it's necessary. It's okay to pay some taxes. You know, I'm happy for IRS with populations like you happy to pay taxes. We obviously need people like that to support our country. Otherwise, if everybody like Donald Trump, our president from the past, then I don't know whether Revenue Canada, I'm talking about Canadian, IRS would even have any business to do, right? So with that said, and of course, I encourage our business people, if you are asking, oh, how do I spend my profit? Do you know what you're asking? You're actually asking, oh, should I do tax planning? That is your real question. I hope with this running to this time, that gives you a more clear picture of how you're going to spend your profit. We talk about 8 ways to grow your business. Remember, I did not talk about, oh, go buy life insurance, oh, go to do investment in cryptocurrency. That 8 items I have there has nothing to do with financial planners' ideas. I am not financial planner, and I do not want to be one, and I am a tax planner, I am a business advisor, have so much experience under my belt, and I can give you a situation, a plan that fit you and only fit you. So I hope you enjoyed my webinar today, and I also want to let you know that we do webinar every Saturday at 3 p.m. On Tuesday, 3 p.m., we also have another short version of a webinar that I do. So I welcome you to subscribe to our YouTube channel and really become a advocate for knowledge spreading. And we're here to spread knowledge, and you can contact Catherine at communitycpa.com. Give her the topic. Today's topic is given by one of our business owners, and he asked that brilliant question again, and I heard this question from other clients, so I decided to talk about how to invest my profit to grow my business for all of you. I will talk to you again on Tuesday and Saturday next week. Bye-bye.